If I can figure out where a move to here is more likely than a move to here a few times per day, I now have a simple, repeatable, systematic approach to trading to be able to capitalize on opportunities. Okay, I've been trading for over 8 years. I've tested out hundreds of strategies and spent thousands of hours figuring out what the most simple and effective way to trade is. Using the model that I'm going to be sharing with you in today's video, not only did I hit my largest single day P&L last week and clocked one of the best starts to my trading month in my career, but I've also got a ton of amazing amount of feedback. So I'm going to outline these strategy fundamentals in the steps to follow. Then I'm going to run through a mock trade example and show you all of the setup criteria and how I actually execute on these trades. Then I'm going to show you live examples of me taking these trades in real time so you can see inside my decision making. Then at the end, I'm going to show you the extra layers of confidence that I use on each trade called Confluences and how I use those to push up my win rate and be a little bit more selective on the trades that I do take. It doesn't have to be that complicated. You don't need to learn 1,000 different ICT models or use any level of guesswork as long as you lock in and process the information that I'm going to give to you. So you'll get a full look inside some of these strategy and framework that I've been using over the past couple months to have some of the best trading of my career. So let's get into it. All right, so like I said, over the past several weeks, I've had some of the best trading of my entire career. This is the largest single trade that I've made using this strategy that I took just a few days ago. And understanding some simple analysis allows me to pick out perfect spots, let the market trade into my direction. And like I said, that's basically how I've been able to crush it just in a few days. Now, it doesn't mean that this is a straight line and this just happens every single day. Of course not. But the goal is to be able to put yourself in a position where you're repeatable, you have a strategy, and then you follow that daily so you can optimize over time and actually have proof of concept and execute on it. One of the most important things to understand and something to make sure that you're not doing is to keep your trading from being too abstract. So an easy mistake to make is to have strategies that are way too confusing and you're not able to measure it properly and you're also not able to be repeatable. Just like any elite person at a sport, they're able to keep their process so refined and repeatable that they're able to execute it when their nerves are up and they're able to fall back on their systems. Okay, when we're talking about professional trading, we need to be able to do this same exact thing. So obviously the trading strategy can't be too simple because then it's not going to be effective because you're not filtering through the data enough. But the more simple you can get once you get to that successful threshold, the easier it's going to be able to be repeatable. So having a simple checklist that you follow, that you go through your repetitions each time is better than having too much abstraction where you're like, I think this is going to happen. I have a feeling this is going to happen, and having way too much on your chart. You need to keep it simple. And if you look at professional traders, their charts are going to be very minimal. Most hardly use many indicators and they're mostly reading price action. This is something that you'll realize as you get further into the game. Everyone's trading the same information, has the same access to basically all of the tools. So the only thing that's going to separate a successful trader from a trader that is not successful is how they're able to structure themselves inside of this whole free world where you have infinite ways to try to make money. It's up to you to create that framework, that discipline, and then get the desired result out of that framework. So that's what I'm going to be sharing with you today. So after 8 years of doing this, I can tell you that even though trading is advanced, you can really boil it down to 3 simple general things. And if you focus on this, it's going to sort of be your North Star from you getting too confused. So that's observing patterns, average risk reward, and winning percentage. So the first step, observing a pattern, is basically if-then conditions in your mind. If this happens, this is likely to happen. This is what I call observational level tendencies. So we're really not putting pen to paper trying to analyze that information on a deep level. We're just looking at it, seeing what happens, and seeing if we can start to develop ways to mathematically quantify that probability. And the next thing is calculating average risk reward and winning percentage. So whenever we're putting risk on the table, how much, when we're right, are we winning versus how much we're risking? So if you see, say we're risking $100 on a position, we enter the market at a certain area. If the price moves down to this level first, we're losing $100. That's our risk on the position. If the market moves like this, it moves to this level before this level, so we're making, say for example, 300. So now we have a 3-to-1 risk reward, and that mixed with winning percentage. So how often are you getting price to move here versus here first is going to be your winning percentage, which is represented up here. So you can see in this scenario where we have a 3-to-1, all we need is a 30% winning rate in order to be profitable. If you have 40, then you're definitely profitable. 50, definitely profitable. And this is truthfully how you can very simply boil down trading to make sure that you're staying on the right path. And this is almost always what we're focusing on with our private members. You can see they're always referring to trades in units of R, right? We're focused on the process, not necessarily just showing off big profits or talking about wins, right? We're talking about if I'm risking $100, this is $1,250. If I'm risking $100, this is $3,200. 23R, 2,300 risking 100, 230 risking 10. That's really what you're going to see more advanced traders talking about is percentage gains or risk reward units. Then it becomes more of a game. That's really what we're trying to focus on here. So let's get into some of the detailed framework of the strategies that I've been using over the past several weeks. Before we get onto the charts, I'm going to go over in a diagram and sort of drill in the sort of observation level identity to the strategy. And and then we're going to get more into the technical with the tools and the charts and everything. So first, let's understand where these trade opportunities are coming from. So say we have a chart that's moving up in a normal trend pattern like this, obviously moving up and moving down. Every time we have these sort of corrective pull downs in trends, we can actually find opportunities to enter, play the move up, and continue playing into these sort of pullbacks in trends and ride the trend all the way back up. You can see we have trade opportunity 1, 2, 3, 4, 5, 6, 7. Okay, oftentimes with this trade strategy, if the market conditions are right, we can have a lot of opportunities in a single day. Okay, sometimes I've had almost 10 individual trades on one single trading session, which if we're following all our rules and our confluences can add up really, really quickly. So really dialing in on this can allow for a lot of ground to be covered in a short amount of time, as long as we're actually containing risk, approaching it responsibly and in a smart way, and making sure that we're finding ideal market conditions. And we're going to dive more into that in a second. So that's step one, is understanding that each what's called impulse and corrective wave is going to open up opportunities for us to be able to enter into trends, play into the dips, and play into continuations. And we can do that so long as all of the criteria is allowing us, and we can play into the ups and the downs of the market. So let's get into the second part of the strategy, which is going to be the tools and indicators that we're going to need to actually deploy this on our charts. So the first thing that I add to my chart is a simple moving average. So I call this simple moving average alignment. So what that's going to be is plotted average lines here, which is going to track the general movement of price on a chart. And that's going to show us the general direction. And you'll notice we have a shorter term and a longer term ones, which will show us critical levels of price can oftentimes pull down to and the strength of a general trend in the market. The next thing that we're going to be using is something called a custom fib. And this is a simple tool on TradingView. I'm going to show you how we can set it up on TradingView in a second. So this is the top of our fib, our 1 level, and this down here is going to be our 0 level. This is the golden ratio in Fibonacci, followed by the 0.382, 0.17, and then negative 0.05 level, which is going to act as our entry. So if price is trading up here, that's going to be considered our entry. This is going to be our dip by 1. If price continues to move down, this will be our dip by 2, and we have our stop loss up here, and up here is going to be our original take profit. So depending on how these markets sort of chop around is going to determine which levels we're either adding to, taking profit, and we're going to be able to adjust it and sort of be responsive to the market to be able to simply follow these trends. And the way we're going to do that is by using a simple calculation. And this is something that we've tested over thousands of pieces of data. Without getting into too much of the nuances, we're basically able to put in the amount we're trading with. Then I can put in my entry, my original take profit, my stop loss, which is all being told to me by this custom fib. And then I can add in my dip buy levels, this, and it shows me how much I need to enter with at each dip buy level, where I need to move my new take profits. And this is going to be how I'm actually executing on the chart. And like I said, once I'm doing this on the chart, it's going to start to make a little bit more sense. So let's go over to the charts now and look at some mock examples so that you can understand the actual setup and the execution for this style of trading. And while we're going through this trading strategy, I want you to really remember this table right here as it relates to our risk reward. And every time we're making one of these, this is called 1 unit of R. So that would be 3R. This is 5R. We can also have fractional R. So say we were to make 0.5R, risking 1R, but say our winning percentage was 75%, even though we're risking more than our potential winning because we're right more often, this combination here is truthfully all that matters. So keep that in your mind as we're going over this example. So I'm going to go through this step by step. And as we go through it, I'll show you how I'm setting things up and why, so that it starts to make a little bit more sense. So to start off, I have something called the IT Foundation Indicator, which if you also want access to, go in the description, follow me on Instagram, DM me the word tools, and I'll have that sent over to you automatically. But what this allows me to do is a few things. First, it allows me to toggle on and off the New York session open time, which pre-market starts around 8, and then 9:30 here is when the market opens, which tends to, as we can see, drive a lot of volatility and a lot of volume into the market, which is something that we have to take note of with this style of trading. The second biggest thing is something called the EMA alignment here. So you'll notice as I toggle these on and off, these lines are going to appear and disappear on the chart. So we have our longer term and then our shorter term, which are obviously more responsive to temporary moves in the market. And we'll oftentimes have response levels off these lines as well. So it can guide us in the general direction and give us critical areas to consider. So these are two things that I'm adding to my chart. So the next thing that I'm going to do is sort of follow this checklist. So the first thing I'm doing is waiting for 9:30 to open. So once this happens, I'm going to wait and see what direction generally is the market playing into. And I'm sort of going to mark off the highest the price went starting at 8 and the lowest the price went during that session. And that's going to give me a range to see where price is starting to move through and consolidate, which is then going to allow me to establish a direction. direction. So you can see here, price kind of broke underneath that level, but quickly sucked back up. For this strategy, I'm really looking for price action to sort of go in one direction and commit to it. This swept out this level and reversed over, so I'm not really interested in taking a trade like that. If we look at this same exact level here, we've had a bunch of candles closing underneath this level, which confirms to me a proper downtrend. So I can kind of use that to understand like generally that the trend has sort of smoothed out and picked enough of a direction for me to be able to play into swings in that direction. The third thing that I'm going to be looking for is waiting for moving average alignment. So you can see we have green here. The top one is still red. Once this sort of rolls over and pulls here, we have our 20 or 50 and our 200-day EMA all aligning to the same color. So once we have a direction picked and moving averages aligned, I'm going to basically consider this a range. So this whole thing is a range that I'm going to be looking to potentially take a trade in that direction. This is where I'm starting to use the fib. So in TradingView, you can go over into your trend-based fib extension like this. And these are the settings that I'm using if you want to take a screenshot and sort of match it and save it as a template here. Then I'm going to take from this swing low point up to the most recent high before the moving averages started changing in one direction. So you can see they're green here. All of a sudden they start to turn red here. So I'm taking from this swing point to this low swing point. So now I'm going to be evaluating Confluences and doing extra analysis. So I'm going to get into that a little bit later after a few examples, because I'm going to show you how I understand this overall concept. So what I'm looking to happen is basically for price to make a push, come into this entry level, and then roll over into our take profit level here and continue that trend. Now, if that doesn't happen, we now have dip by one, dip by two, and our stop loss outside of this general movement on the trend. So if price is to move into this level and or this level, now we're basically going to be dip buying into our position and moving our average up, so that now all we need, even if the market changes direction on us completely, is for a slight pullback in price to be able to exit the position, still maintaining a win, even if we're wrong about the trend direction. What I do is like to maximize the movement when I am right about these, but if I'm wrong, this is a way that we can get out while maintaining a high winning percentage. Now, there is a catch to this. So when we're entering a position, like we were talking about our risk profile before, this is our original risk reward ratio, which you can see is basically 1, right? So our stop loss is back here, take profit is here. So we'll play this forward. Price doesn't continue moving, actually comes up and hits on this dip by 1 level. Now our average is going to move somewhere up to here, and our new take profit is going to be somewhere around here. Same thing is true if it comes up to this level. Then our average will move somewhere up here, and our new take profit will be somewhere around here, which is now at the end of the trade is going to make it so that we're actually aiming to make about 0.2 R per trade while risking 1 unit of R. So once again, higher probability of winning, but lower amounts of reward per trade. And you still have that full 1 unit of risk if you lose the entire position. But what I've found in my trading is that if we're able to use all of the confluences and rules that I'm about to show you, and with controlled risk and proper management, this can allow us a really cool strategy to be able to play into dips and trends and have a ton of trade opportunities on any given day. And actually, the way I was able to have one of the best trading sessions that I've ever had with this strategy was by adding another layer of confluence and sort of letting a trade run, which I'm also going to explain a little bit more on in a second. But you can see our dip by 1 level was filled, and then price came back down to this level, which allowed us to get out because of setting up our position with this calculator correctly, which once again, if you DM me on Instagram tools, this will be sent over in a whole tool suite for you to also play around with. So you can see price definitely cleared that level and definitely cleared this level, which would result in a winning trade. So now I'm going to continue with the session, and we're going to find several other opportunities. So once again, we're waiting for 9:30, which is over. So really what we're looking for now is for a direction to fully be established again in the opposite direction, and then we need to find a range and evaluate. So based off of trend analysis, this level is the level that needs to be broken. So price moves up, has an adverse reaction off of that level, and continues to move down. So we still don't have an established direction. You'll notice off of this level, we finally start to consolidate above that before making a pull back down. So once again, I could take my fib from this high level down to this swing low level. So once again, we have directional confirmation. We find our trend, which is here, set up our fibs. And even though this breaks down, now we have our entry filled, which sets our position up like this. Price continues to move down against us, fills our dip by 1 and our dip by 2, which puts our average somewhere around here, new profit somewhere in here. And then price oftentimes responds off of these critical fib levels and support levels over here, bounces up, and we're able to, once again, using that mathematical strategy, be able to pull off another win. So now we have a downtrend in this direction, which gives me a new range. The trend level breaks off of here, creates a new range. I can draw from this level here into our position. We enter right here. We add dip by 1, dip by 2, comes back down, fills us once again for another full win. Now this can get even juicier as we add confluences to this, which allows me to basically play the market to the upside once I have an even deeper order if I get an initial response, which is how I was able to have that massive trade that I took last week. Even even though with these trades, you're typically making say 0.2 for every unit of risk, I was actually able to make 1.25 R off of one single trade, even though my win rate is like up over 90%. So let's find a few more. So now once again, we're waiting for a direction to be established. Now we're looking at the lowest swing to the highest swing, which would be here to here. And as we get good at trading, start to add confluences, and you can start to do general analysis like what we do on the private side of our team. We're actually able to say like, this is a really strong area of support. So if price is able to break through it and come down and retest it and then continue, there's a high probability of a win on this trade. So price comes down, fills our first entry level. So we're in, comes off of that level, fills our second one. You can see this is where price dipped down to before having a rebound. And once again, getting us out for a nice, solid, consistent win. Now we're once again waiting for a new level to break. You can rinse and repeat this cycle, but you can see over the course of say a 10-hour session, I've been able to find 1, 2, 3, 4 trades. Sometimes there's going to be 5, 6, 7, even more potentially. So let's take a look at me actually executing some of these trades in real time. And then I'm going to show you some of the added confluences and extra analysis that tend to push up my conviction, allow me to allow trades to run and get my win rate up higher. All right, so you can see I've done my analysis. I've waited for my moving averages to align. I've entered and set up my position. Okay, so I have my entry level here. Then you can see price starts to move down against me and break underneath this trend level. And that's where my dip by 2 level hits. And so price starts moving against me and fills me on that sort of dip buy. And so here I'm assuming that the price is going to react on the underside of this trend, which is something I call an underside overside retest. But price continues to move really, really strongly up, which puts me, you can see up $2,600 now just off of that one flip, even though my original entry was right here. Okay, so I'm going to dive a little bit more into some of the other confluences, but I'll just sort of show you some of the stuff that I do look for as this trade sort of playing out. So this trend level, I was assuming would catch some level of support. Since it broke through it, I actually expect a bearish sentiment to basically respond off of this level and then continue moving down. If that was the case, I would hope for a dip buy off of this support level and then a correction up, and I'd get out of the trade as normal. But once I was well into profit at this level and I started to see that the price was moving through that level, that shows an extreme amount of strength. And so I deployed something called an L1 bomb. Okay, and so that L1 bomb allows me to have now a dip by 1 fill, but now I'm going to be taking profit at the original take profit level. So I'm actually going to play for a full move with a slightly deeper retracement. Okay, that way if the price continued to move down, I'm still getting out as normal, but if it plays in my direction, I can sort of gauge it and allow it to run. And you can see now I'm up 5,500 and I'm really playing this into my advantage. Okay, and you can see it sort of pushes from there, reclaims that trend. We're up 8,200. All right, we started to get some consolidation, and this is where we started pushing over this high range, and that's where unrealized was up over $10,000, which is more than my entire risk on the entire trade. Even though I was assuming to get 0.2, now I'm up over a whole risk factor. So it's actually 5x more than I was expecting to make on profit. Okay, so I wanted this high level to break. I moved my stop loss up, and then we started to consolidate up in this range. And then I ended up taking the trade off for a little under 10,000 in full profit. So I kind of teased some of the confluences there, but there's a lot more to it that I'll get into in just a second. Let's take a look at this second trade. Okay, so once again, we have the New York Open happening. We have a full consolidation under the range, and all of our moving averages starting to align. This is where I take my initial entry. Okay, and you can see another confluence that I'm using is something called that underside overside retest. So I'm doing analysis on this trend, trying to figure out where we could have a possible test of the trend that was being supported before, price breaks underneath it, and then tests off of critical levels like right here. So you can see I knew my dip by 2 is going to happen right into that critical level, which added to my conviction and the statistical probability of this trade working out. So you can see dip by 2 fills, responds beautifully off of that level. Okay, so you can see now I'm getting a response off of that area. I'm already up 1,900, right? There's going to be slippage and fees in there, right? So it's not actually 1,900 realistically, it's a little bit less. Price pushes back down. We're up 23, 24, and the trade gets taken off the table. So even though, once again, I was playing this level, we got to push up, break through this level. I was aiming for my response here. I actually meant to hold this trade longer because we did get such a good response off this level in strength. I was going to sort of play into the strength a bit, right? That's just personally what I do. Ended up screwing something with the orders. So I took the trade off the table for about $2,500. Like I was showing you, you can basically go do the repetitions and follow trends this way and find a ton of trade opportunities. Okay, I can't share everything here because I have to be fair to the private side of the team who has the education, but I do want to provide value to you guys and show you that you can even further refine this down. So we did talk about support and resistance, overside, underside. This is something that I'm applying to all of my trading basically. Okay, I did go a little bit over the L1 bomb. I want to talk about some of the other confluences that I like to see, which are RSI avoidance and something called Elliott wave avoidance. Okay, this is getting a little bit more complicated, but it's something that personally improves my trading. Okay, so there's something called Elliott wave theory, which basically assumes that trends move in 5-wave patterns. All right, so you have 1, 2, 3, 4, 5, followed by something called ABC wave, which is our corrective pattern, A, B, C. So there's overall rules and a ton of ways to read this that I'm not going to get into in this video, but effectively, one thing that I'm doing with this strategy is making sure that I avoid trading into a wave that has a 5-wave, right? Because this is going to indicate we could have a pullback and then a corrective pattern, which is not in the direction of our trend. So I'm always avoiding 5 waves, and I'm taking this type of analysis into consideration to be able to get in on low volatility areas that have a high probability of continuing in my direction. Okay, so as an example, the first trade that we took, I was kind of biting my tongue showing the examples because I actually wouldn't have probably taken this trade, because if we look, we have our 1, 2, 3, 4 down to 5, which indicates to me we could have A, B, C and have a counter move in that direction. And you can see that's exactly what happened, where price ended up flipping, still got us in and out, luckily, of the trade, but ended up reversing completely in the direction. Where something like this trade breaks out of that previous trend, has a 1, 2, 3, this would be 4, and then a 5 assumption down. And you'll notice, even though this did eventually change direction, price moved well within our range to get us out multiple times without having to be super precisely accurate. Okay, so when I'm trading the strategy, I'll go into my trading view, click on this bar replay, and just go back through tons of historical data, do all of my analysis, learn what works for myself, build up these Confluence rules. That way I have my systematic approach in terms of R, and now all I need to do is follow the process and follow my training. Okay, and that's basically all we're working on with our community, is being able to work in terms of R and focus on the proper process. Okay, and once again, month is off to a crazy start. With this strategy, also another strategy, I'm going to be going over other trades on the channel, so make sure if you're still here, you hit the like button, you subscribe to the channel if you want to know when we put videos out in the future. If you need the resources, go in the description, follow me on Instagram, DM me the word tools. I'll have everything sent over to you. Okay, check out the resources on the screen here. And until next time, I will see you all in the next video.